In today's video, we're going to be looking at the effect of the Fed winding down their balance sheet and basically the ending of the tightening cycle and the effect on your altcoin. Also, we would be looking at the Halloween effect right here and what that could happen to your altcoin. So welcome right here to the Altcoin Doctors channel. First, we're going to be looking at what we call the Halloween effect. Now, the Halloween effect always say that from Halloween, every single time from the date of Halloween, as you can see, we always saw some sort of a bump in the crypto market, right? Do not take my word for it. As you can see, this was the pump in the last Halloween, basically for the last 5 years. And as you can see, every single time we saw some sort of a pump that has happened basically for the crypto market. Same thing happened in 2020. As you can see, we saw that pump from Halloween basically for the first week of November. Same thing in 2021. We saw some sort of pump towards the upside. Same thing in 2023. Some sort of pump immediately after Halloween on October 31 going into November, the first week of November. So we always saw some sort of a push to the upside in the first week of November. Is that going to continue? We're going to look at that with a very high probability that could continue. A very bullish thing is that the Fed have beginning to wind down their balance sheet right here amid, and they have basically said or announced that they're going to end QT basically by December 1st, which is very, very bullish for markets. So basically ending of QT, which means all of those monies which they have been sucking out of the market right here is not gonna be stopped, or it could be very, very bullish for markets, as we could see some sort of huge push to the upside that could happen very, very soon. So on the chart right here for rndr, rndr is currently at the $2.2 level. We're currently ranked at 67 with a market cap of about $1.15 billion. So today we're going to be looking at the price action, the technical analysis and price prediction right here for rndr. Rndr in the last 1 week is down about 9.4%. So without further ado, let us push to the chart, right? So on the chart right here for rndr versus the USD Theta on the daily time frame, Binance is the data source, right? So for rndr, one of the ways we have been seeing, or things we have been seeing right here for rndr, apart from the fact that rndr moves from level to level, is that much of the 2025 price action for rndr has been basically some sort of a consolidation type of structure, right? And do not take my word for it, but this is a perfect move with what we call our Wyckoff accumulation pattern, right? And the way this works is that we have 5 phases: the phase A, phase B, phase C, phase D, and phase E, right? And the way that happens right here is we have our phase A, phase B, phase C, and then phase D and phase E. The most important part is our phase C. Our phase C, because that we have the lowest point right here, which is what we call our spring. Now, the spring is usually lower than phase B, and then also lower than our phase A lowest point, right? And that shows that we're about to see some sort of push right here to the upside. And that is exactly what is happening right here in the chart for rndr, right? So we have basically our phase A, phase B, and then we're seeing right here our phase D our phase C going into phase D. Now, how do we know that this is phase C? Basically, we have the lowest point, which is our spring. And how do we know that this is the lowest point? Lower than the lowest point of phase B, lower than the lowest point of phase A, right? So if this is our spring, then effective to see right here that we're currently at this test level before we see a push into phase D and phase E, right? As you can see, this is what we call the test after the spring. And that is exactly what we can see right here. We always see that test level after our spring, which is our lowest point, right? So when this spring about to get into phase D right here and then phase E, right? So the same thing right here. We have gotten into this is our spring. We're getting into right here our phase, our test right here, and then we could see our phase D and then the phase E, right? And that would also coincide right here with our Halloween effect, which said that usually after Halloween, we usually see some sort of push to the upside right here for the price in the cryptocurrency. So let's see how that plays out, if that would be now to the macro chart. The first chart we would be looking at right here on our macro chart is what we call the USDT dominance. And we said the USDT dominance is very, very important because the USDT dominance is basically an inverse right here of the crypto market. So one thing we have seen right here is that basically every time we have seen that the USDT dominance is going to the upside, usually what we have seen is that the crypto market is pushing to the downside, right? Do not take my word for it. As you can see right here in 2021, when we saw the top of the crypto market, basically what we saw is that the USDT dominance began to push to the upside, and basically that was the top of the market, right? So for us to get the top, as you can see, we have to see prices come towards to find some sort of a support, either around this area right here. So basically is an inverse of the chart, and we are expecting that we are going to see the inverse a push to the downside right here on the USDT dominance, and that is what will take us to the top for the crypto market, right? So basically if that happens, currently we are at a huge resistance right here for the USDT dominance, which means we basically could see one last pump in the market like we have been expecting. That could be with a high probability what we call the Halloween pump, which we usually see towards the end of October and going into November, right? So the USDT dominance, we're expecting a rejection right back to the downside, which could see a very, very huge push to the upside, right? Next on the list right here, which we have been looking at basically right here, is the Bitcoin dominance. We said the Bitcoin dominance is very, very important because this shows us when altcoin season is going to start, right? So and we have said basically altcoins started in 2014. And as you can see, we had our first altcoin season in 2016. And one of the things, or one of the ways we knew that this was altcoin season, was that we saw that the Bitcoin dominance, or the BTC dominance, fell from around 96% down to as low as 37%, right? In our next altcoin season, which happened in around 2020 to 2019, we saw this huge push right back down from 74% right down to still that same 39%. And we said usually before we see the last descent, we always see the sort of last sort of fake out, as you can see right here in our first altcoin season. So we saw the first level of the altcoin season and then the second level, right? Same thing right here. Started in 2019, we saw the first level and then the second level, right? Same thing right here, which we have been seeing for this altcoin season, which is currently happening. We said first we've seen the first one, which happened right here. We've seen that push to the downside. Currently, we're expecting some sort of a consolidation before we see one last push to the downside, right there for the Bitcoin dominant. So we're still very, very bullish on altcoins, but with a probability this could get us into the ending of the year, stroke 2026. So currently we're still in that pullback before we see that continuation pull to the downside right here on the Bitcoin dominance, which is very, very bullish right here for altcoins, right? Next on the list basically is our chart for the total crypto market cap. Now, why is this chart important? Like a lot of people will say, and like always love to see on the channel, show me where money is going to in the crypto market, and I'm going to show you what is going to happen to the price of that asset, right? This was the exact chart that helps us spot the bottom of Bitcoin right here. This is the total crypto market cap that comprises all of the monies that is coming into the crypto market, right? So basically we saw at the top for the total crypto market cap for the last year was about 2.6 trillion. We pulled back to about 765 billion, and since then we have seen prices move to as high as 3.7 trillion. We are expecting that this cycle is going to top at about the 5.62 trillion. Currently we are holding support below or on top of that 3.6 trillion as all of the money is in the crypto market. So we're expecting even more monies to come into the crypto market, which could push the price of the total crypto market cap to as high as that 5.62 trillion, and that could be bullish right here for the crypto market in general. And last but not the least is our altcoin market cap, right? What we call our total to all our altcoin market cap. So this comprises all of the altcoins in the crypto market, no matter the altcoin you're holding, just excluding Bitcoin, right? And what we have seen, right, basically is that the altcoin market cap hasn't set any new highs, right? Basically, as you can see, we're 1.67 trillion last year, pull back to around 450 billion. Same thing right here. We are back right here at that top of about 1.68 trillion. So no any sort of new monies have come into the market for altcoins, right? But one thing also we should expect, we're saying that the Fed has just stopped QT, so which is going to be very bullish for altcoins. And so we're expecting that minimum, we're about to see that a push towards this 2.4 trillion for all of the altcoins, which could be bullish for altcoins, and we could see a rally, right? So currently we're getting that support below this 1.4 trillion. We could consolidate right here before we see another push right back to the upside. So that's what we're expecting right here for the altcoin market, and we're very bullish, expecting one more rally to the upside for altcoins in general.